Hey guys, what's up? So in today's video, I want to talk about Dropbox. This stock has been getting a lot of hype lately. YouTubers like Jeremy from Financial Education recently did some videos on Dropbox, and I gotta say this stock is looking quite compelling at today's price. So I'm gonna be doing a full analysis on the business, going through their business model, their financials, their management team, and at the end of the video, I'm gonna be giving my opinion whether I think it's a buy or not. Okay, so before we get into this video, if I can ask you guys to drop an early thumbs up, really helps out the channel and the algorithm. And feel free to subscribe if you want to see more stock related content. I try to upload almost every day of the week. And so yeah, let's get into this video. Okay, so I'm sure most of you know what Dropbox is. This has been a really popular service for most Android users. I switched to iPhone, so I don't use Dropbox anymore, but I used to. But essentially what they are, they offer cloud storage, file synchronization, personal cloud, and client software. Now they do have the free version that has limited space for you to store files, but there's also options to upgrade and pay money for more storage, and it offers many more usages as well. So you can see here for individuals, there's Plus, which you can buy, Professional, and then for teams, there's Standard and Advanced. A lot of big businesses will pay for Dropbox because it offers unlimited storage and many other services as well. That helps collaborate the teams within the business to better manage their files and just makes their life overall easier. Now, before we get into the financials and where they're trading at and all that stuff, I just want to point out one of their new services they released on June 30th. It looks really interesting. They released HelloSign, which is basically something like DocuSign. It allows for e-signatures, which is becoming really popular and it's a very fast growing business right now. So I think this could actually really help out Dropbox with continuing their revenue growth. But yeah, I don't want to cover too much what Dropbox does. I just feel like most people already know that. I mean, they've been around for quite a while and most Android users already have been using Dropbox. So if you want to know more about what they do, you can just go on their website and find that out. But I really want to focus on the financial aspects in this video. So you can see here, Dropbox is the latest San Francisco tech company to make remote work permanent. So this is going to be super good for the business that I'll mention in just a second. But quickly in this article, it also talks about for employees who need to meet or work together in person, the company is setting up Dropbox studios in San Francisco, Seattle, Austin, and Dublin where it's safe to do so. So the nice thing about this is that they can downsize from these massive, really expensive brick and mortar commercial buildings, where now they can just have a studio that's much smaller, less lease payments, and less money is spent on these big leases. So this is going to really help save them money in the long run, and it should contribute to better margins. So you can see here in Dropbox, their users grew by 10% year over year, while gross margins improved from 75.8 to 79.2%. And I think we can expect to see these margins continue to improve. Just the downsizing from these big commercial buildings should leave more free cash flow at the end of the year. Okay, so let's talk about the CEO. One of the most important things for me when I'm looking to invest in a company is who's running the business and are they capable. In Dropbox case, they have a very good CEO, which I love to see. His name is Drew Houston, and he's the co-founder and current CEO of Dropbox. So that's also a positive when you see that the CEO is the co-founder of a company. If you think companies like Amazon and Tesla and Apple, they all had founders involved in bringing up the company. So yeah, this is definitely a huge positive that Drew is one of the founders of this company and is still the CEO. A little bit about his history. So before working on Dropbox, Houston worked on a number of other startups, including Bit9, Accolade, and HubSpot. And then in just February of this year, Houston joined the board of directors of Facebook, replacing Netflix CEO Reed Hastings, who left in May 2019. So this is also good because Houston has many connections in the big tech world, which is just gonna be good for the business. It's gonna help bring ideas to the table, and he's around a lot of very successful people. So I'd feel really confident with Houston being the CEO of Dropbox. So far everything looks good, the business looks good, the management team looks good, but let's look at the financials. So in mid 2018, Dropbox went public around $27 here. They then spiked up all the way up to almost $40. And then since then, they've trended down all the way down to around $20 as of right now. And this decrease in price isn't from anything negative happening. Actually, the business has been performing very well over this time. And so that's what I like to see when I'm looking at a stock, if I see the stock price going down, but the fundamentals getting better, usually that can lead to great buying opportunities. So if we look at here, Dropbox currently has a market cap of 8.33 billion. Its trailing P is 251, but its forward P is expected to be 22. It's expected to do very well over the next year. And you can see its PEG ratio is under 1. This is a really good positive sign too. Any PEG under 1 is usually a strong buying indicator, especially for a fast-growing company like Dropbox. And if you look at their price to sales ratio, it's 4.66. This is quite low for a fast-growing company as well. And then looking over their income statement, we can see their revenue has been done nothing but increase over the last few years. In 2016, they were bringing in 844,000, and then in 2019, 1.6 million. So they doubled in just a 3-year time. And so I like to see this, that the revenues have consistently gone up, but the share price has consistently gone down. At some point, the share price will start going up as the business continues to do well. So it's just about getting that timing right. Another thing that you gotta love to see is their operating cash flow. It has done nothing but increase, doubling since 2016 as well. And their free cash flow at the bottom here has actually tripled in the last 3 years too. So this company has done very well since they IPO'd. Okay, so where do I stand with Dropbox? Well, first, looking at their management team, I think that they look very promising. They're all very experienced. They have a co-founder who's the CEO. He has lots of connections, so I'm not worried at all about their management team. I think that's definitely one of the big positives about this company. And then looking at their business model of Dropbox, I'm kind of mixed on it because Dropbox just seems like it's like a dying thing. I remember way back in the day in 2015 when I had an Android. I don't know how relevant it is, but when I see their financials doing so well as they have been, it kind of makes me rethink like, okay, maybe this company is doing well, but maybe I'm just the one out of the loop, or maybe Dropbox really does cater more to businesses and it offers them really good services that I just haven't ever used myself. So yeah, I'm not too sure how I feel about the business model, but I'm actually not concerned about it. That's the beauty of having such a good management team. I think that they can easily transition and see how the world is changing and adapt to that. And the proof is in their financials, in my opinion. And then that leads us to the stock price continuing to downtrend, but the business continuing to do well on a fundamental basis. And that's why I would say, in my opinion, Dropbox is definitely a buy. It's been a few years since they've come public, which is usually a good time to get into an IPO. Things are starting to consolidate. The business is more established in the public markets, and fundamentally they've been doing well. So I'm actually going to be looking to enter a position into Dropbox in the next couple of months. I'll definitely post a video when I do decide to do that for you guys. But yeah, just looking at their financials and the way the business is going, I think that this stock has a very good risk versus reward situation where you're very likely to be rewarded if you hold the stock for the next 5 to 10 years. So I really don't see much risk with the stock, but they do have some steep competition with Google and Microsoft. So I mean, it's always possible for those big tech companies to push this guy out. But personally, that's not something I'm too worried about. So it wouldn't stop me from investing into Dropbox. So yeah, that's all I have for this video on Dropbox. I'll definitely continue to do more videos on them that are more in depth, covering other areas. If you guys enjoyed this video, please drop a thumbs up on it and comment down below what you think about Dropbox, whether you're a buyer or not, and make sure to let me know your reasons for buying Dropbox. Anyways, hope you guys enjoyed the video. I'll see you on the next one.
Oh.